Some analysis now of this latest effort and what was behind the urgency of it. It comes from Douglas Redeker. He represented the U.S. on the executive board of the International Monetary Fund from 2010 until the beginning of this year. He's now a senior fellow at the New America Foundation. And Jacob Kierkegaard, who closely watches European matters for the Peterson Institute for International Economics. And gentlemen, we thank you both for being here. Jacob Kierkegaard, let me start with you. All of this stems from the collapse of the real estate bubble in Spain and the banks holding the bag.
Yeah, basically, I mean, what you have on a national scale in Spain is essentially what we've seen in some of the regions of the United States, in Nevada, South Florida, South California, where essentially you have an enormous increase in housing prices and a subsequent bust. And the bust breaks the back of the banks. There needs to be a bailout. Unfortunately, the Spanish government has been in denial about the true state of its banks for pretty much since the crisis began. But you could say that finally they have run out of options. So what happened over the weekend was really the end of denial.
So, Douglas Redeker, what caused them to change their mind? Because, as we just heard, they have been saying for days and days that this wasn't necessary.
Well, not just days and days. They've been saying it for a lot longer than that. At the end of April, there was actually a report issued, a preliminary report, but a report nonetheless, by the IMF, which gave their financial assessment of the financial sector of Spain. That highlighted the weakness of Bankia, which is one of the large banks, and that set in motion a chain of events in which the government had to put money on the table to save Bankia. And that raised the entire specter of where the money was coming from, not just for Bankia, but for the broader financial system in Spain as a whole. And that's really the step that led to what we saw this weekend.
So this, and yet just to be clear, Jacob, this is a bailout that's different from what happened with Greece, with Portugal, with Ireland. Is that right? Explain how.
Yeah, basically, I mean, some people have used the expression bailout light about this, and there's some truth to that, because basically what this is, it's a loan to the Spanish government with the intent, it's an earmarked loan that basically goes towards the sole purpose of recapitalizing the Spanish banking system, which is quite unlike the three other bailouts, or the traditional IMF bailout, where basically you finance all of the financing needs from the entire government, including deficits and everything else is covered by, the IMF or the Euro area combined. This is not the case here. It's solely for the purpose of recapitalizing the banks.
And Douglas Redeker, how solid a deal is this seen? I saw a quote today from the Nobel Prize-winning economist Joseph Stiglitz, who said this really isn't going to work because the government is in essence bailing out the banks that have bailed out the government by buying government debt. How do you see that?
Well, that's not the problem here, because that's an issue that we've got, which is a dynamic that has pervaded the entire European crisis for years. That relationship between the banks and the sovereigns is one of the dynamics that needs to be broken. So the cycle being broken is actually a good thing. Sovereigns being the governments. Right. The problem is the first part of your question, which was how solid is the deal? And that's why I think the markets responded as they did today, because there are a lot of ambiguities and uncertainties here, not the least of which is where's the money coming from and who's it going to and on what terms. Most people would consider that to be a rather soft deal if those basic parameters are not yet defined.
Well, let's take those questions one by one. Where's the money coming from? I'll ask you that one.
Well, it's unclear yet. The money is supposed to come from either of the EFSF, which is the established mechanism for the Europeans, the European Financial Stability Fund, or the ESM, the European Stability Mechanism, which doesn't exist yet. It's going to exist, assuming ratification at the end of this month. It's actually a much more stable entity once it is ratified. But it isn't in existence yet, and let's be clear, it doesn't have any money yet, because, of course, it doesn't exist yet. It's supposed to be funded by the European governments and the markets, a combination, but it hasn't happened yet.
So does that explain why the markets were less than confident today?
No, I think this has a lot to do with it, but I think the bigger implementation risk is what Doug also mentioned, which is where is the money going? Because we still don't know where precisely. We haven't heard from the Spanish government or the independent auditors that they have hired to basically audit the Spanish banks. How much money needs to go to which bank? And what are the conditions under which they will be injected into these banks? Will existing shareholders be wiped out or not? What will happen? Will there be write-down of bank bondholders? All of these are details we don't know.
So why was this announced, Douglas Redeker, if they didn't have all these details worked out? And we know there's the Greek election coming up this weekend.
Well, I think we've seen over the last several years that the Europeans have done a very good job of rhetorically announcing things with details to follow. So even the EFSF or the ESM, those entities that are the big bailout mechanisms, they have been announced over the years in a very rhetorical way with the bureaucrats and technocrats and central bankers and others to fill in the gaps later. The markets want to see the European policymakers come together and make a public commitment to do something real. Whether it actually turns out to be as real as they think is less important than actually showing that they can actually spend a weekend, come together, and make an announcement that appears to actually demonstrate some cohesive commitment. So far, they've done a pretty good job with that.
But at the same time, you're saying, Jacob Kierkegaard, that there's a less than complete confidence that the money, if it is found, if they can pull this money together from these entities we've been hearing about, that it's going to be spent in the way that's needed.
Yeah, no, I mean, I think the key issue here is that the Spanish government has lost all credibility in the financial markets. And they're basically, in my opinion, quite worried that this is the same Spanish government that's going to be overseeing the disbursement of all this money to individual Spanish banks. How is it going to be done? Are the Spanish government going to look out for their political friends in some of the Spanish regions or not? There's just a lot of uncertainty about that. And then also, coming back to your question about why did it happen now, well, I think a major reason was this significant pressure both by the European Central Bank, whom we should remember the Spanish government just a few weeks ago were trying to convince to buy their bonds so they wouldn't have to take this more public bailout. So there's a lot of pressure for them basically to get ahead of the Greek elections.
So just to conclude, at this moment, what does one look for next to know whether this is going to work or not?
I think what you're going to have to see is where's the money coming from. I mean, this sounds simple, but where's the money really coming from? And who's going to actually receive it? And more importantly, the third part, on what terms? Even today, we saw the finance minister of Spain basically say that this was very, very little in terms of conditionality, in terms of the terms. And at the same time, an hour or two later, you heard the German finance minister say, we are looking for real conditionality that would be imposed by some combination of the European Central Bank, the European authorities, and the IMF. And that really remains an outstanding, uncertain term. And I think it's a pretty major one to be outstanding at this point.
More clarity needed.
Indeed.
Thank you both. Douglas Redeker, Jacob Kierkegaard. We appreciate it.
Thank you.
Thank you.
And you can find NewsHour economics correspondent Paul Salmon's Pain in Spain tweets on his Making Sense page, including a viral version of the Lord's Prayer.